I guess we can start. Assalamu alaikum, good afternoon, and welcome to MSX discussion for the first half of 2024. We have here in this room Mr. Ali Abdul Azim, our Chief Business Officer, Commercial Lines. We have Mr. Santosh, who is heading the Risk and Reinsurance Department. And we have Jawahar with us. She's our Compliance Manager. Can you guys see the presentation? Sure. I should. Can you see the presentation?
From my side, yes.
Good. So let's start. So our agenda for today will be a brief about Board of Director composition post our annual general meeting, which was conducted on 30th of March 2024. The organization chart of OQIC. Then we will take you through a snapshot of financial performance for the first half of 2024 and financial position of the company. Then we will go through some key ratios and details related to the performance. And then we will move to the investment details for the first half of the year. And finally, we will conclude with the solvency position of the company. Then after that, we will have a question and answer session open to everybody. So starting with Board of Directors composition, post annual general meeting on 30th March 2024, the shareholders elected Mr. Salim Khalaf al-Mannai as the chairman of Board of Directors, and the members of the board elected was Mr. Musallam Mahad Fatan, who is the deputy chairman, Mr. Abdullah Al-Mizani, who is currently a board member, Mr. Unni, who is also a board member, Mr. Muhammad Wahid Al-Kharousi, and Mr. Ahmed Al-Tabbakh, who is the chairman of Nomination and Remuneration Committee, and Mr. Chirag Doshi, who is the chairman of Strategy and Investment Committee member. So the same count of board members remained like last board. So we had 7 board members earlier, and now it is also 7 board members. Moving to the organizational chart, we have Mr. Hassan Yassin Al-Lawati, who is the Chief Executive Officer. We are missing him today due to some health condition. We have Mr. Ali Abdul Azim Al-Lawati, Chief Business Officer, Commercial Lines, and myself, Muhammad Jawad, CFO and Investor Relation Officer and Board of Director Secretary, and Mr. Omar Al-Shanfari, who is in annual leave, our Senior Manager, HR and Government Relations. Moving to the important part and the main discussion area, which is the financial performance. Starting with the gross written premium insurance revenue. We can see that the company historically is growing from 2021, 31.4 million, 2022, 35.2 million. Then in 2023, we have 63.7 million, of course, in IFRS 17 standards. In H1 2023, we reached to 25.9 million compared to 33.6 million in H1 2024. So the company witnessed a massive growth in performance comparing this year first half with last year 2023, which we will touch base on next slide. The underwriting income, which is the insurance service result in IFRS 17 terminology, we can see that in H1 2024, the company achieved 700,000 riyal as an insurance service result compared to negative 1.7 million riyal in H1 2023. Of course, when we talk about H1 2023, that was immediately after the merger transaction with Vision Insurance. So the company underwriting income or insurance service result was negative 1.7 million, and we witnessed a complete shift in the performance in this year, and we approached 700,000 in the first half of the year, and we are positive that this figure will be much better by the H2 2024. If we compare 2023, 2022, 2021, it is all positive results. Slight decrease when we take 2021 compared to 2023 and 2022. In terms of investment income, the company is maintaining a positive investment income, stable, increasing gradually. 3 million riyal in 2021, 3.1 million riyal in 2022, almost 3 million riyal, 2.9 million riyal in 2023. In H1 2023, the company had 1.9 million investment income compared to 1.3 in H1 2024. That we will discuss in details in the upcoming slides. Finally, the profit after tax for H1 2024 is 1.1 million Omani Riyal compared to negative 1 million Riyal in H1 2023. So if we take the performance 1 million Riyal in 2024 first half in details, so starting with insurance revenue jumped by 30%, reached 33.6 million Riyal compared to 25.8 million Riyal. And the company witnessed a massive growth in specific lines, which we will touch base in the upcoming slides. Insurance service result also from these activities were positive in the first 6 months of this year. So 700,000 Riyal compared to negative 1.7 million Riyal, which represent 140% increase in performance. So the company went through a lot to fix the performance post-merger and to realize all synergies across different departments. And that activity is still going on. And as I stated earlier, we are expecting a better performance also. In terms of G&A expenses, including depreciation, we can see also a reduction of almost 25%. So that is also the effort of the management to reduce the expenses post-merger. Worth to say here that these expenses are only the unallocated expenses. Rest allocated expenses are already factored in the insurance service result. So the insurance service result is net of direct insurance expenses. Investment income, as we stated, is 1.3 million compared to 1.8 million. We witnessed a reduction in equity markets across GCC, Oman also, Qatar also specifically. So that impacted the company performance. In terms of returns from fixed income, that is growing, and the investment portfolio of the company is also growing due to the increase in premiums. But the equity market impacted the performance this year. Net profit 1.3 million compared to negative 90,000 Riyal. Income tax expenses, we can see that it's 230,000 compared to 12,000. A note to mention here is that this year we are calculating also the income tax based on IFRS 17 compared to last year it was IFRS 4. Net profit after tax is 1 million Riyal compared to negative 1 million Riyal last year, which is almost 200%. Slight snapshot on the financial performance, balance sheet items. Total paid up share capital is 22 million this year and 22 million last year, no change. Net worth is 36.5 compared to 36.9. Total assets increased by 5 million to 115 compared to 110 since the business is increasing. Total investment base reached to 61 million Riyal by 30th June 2024 compared to 53.5 million Riyal by year in 2023. Insurance and reinsurance contract asset increased also by almost 2 million Riyal. And reinsurance contract liability also increased by almost 3 million Riyal. Number of employees reduced by 5. So now the company is running with 195 employees, and Omanization ratio of 84% compared to the minimum requirement of 75%. Key ratios of the performance, we can see that in liability lines, if we take the GWP of the company and what is the composition of that in 2023 and 2024 H1, we can see that the company maintained the position and increased a little bit in life and medical by the first half of 2024 and 2023. 42% compared to 41%. But we are witnessing a growth in property lines. So that is 43% compared to 31%, a massive growth in property. Liability lines reduced a little bit from 9% to 6%. And there is also a reduction in retail, 15% went down to 8%. Now the question why the company is not increasing the business in retail, that is a decision also made by the company, considering the difficult market and the rates and the frequency of claims. So currently the company took an initiative and controlled the prices and increased the price in certain segments. So due to that, there is a reduction in market share in retail. Combined ratio in 2023 was 97% compared to 98% now. And we are also expecting this to be much better by end of the year. Net assets per share is 227 paisa compared to 229 paisa in 2023. Return on equity as on 31st December 2023 is 11%. If we take this year, we are still on half year, and we are expecting somehow similar return on equity by end of the year. Moving to the composition of investment portfolio and investment income for the year. We can see in H1 2024 and H1 2023, almost same composition maintained by the company, slight reduction in FDs by 2%, for example, and increase 1% in bonds, sukuk, and 1% in equity. So plus minus, the same composition is maintained. And this is part of the investment strategy the company is maintaining, is to keep around 70% in fixed income instruments and 30% in equities to avoid the volatility and impacts of that to the insurance business. In investment income composition, we can see that this quarter, interest income contributed big time to the investment performance. So we have 1.1 million riyal coming directly from interest income compared to 800,000 riyal in H1 2023, and the rest is coming from dividend income, and there is a negative contribution from retail, realized and unrealized business. In terms of solvency position, this is a yearly activity which we are carrying out. So as of December 2023, the company is having a solvency surplus over the regulatory requirement of almost 30 million riyal, 29 million riyal, compared to the minimum required solvency by law based on risk-based solvency calculation, 10 million riyal. And the company is well solvent, and the solvency is one of the key positions and key criteria evaluated on monthly basis. And the same is maintained for 2024, if not better. I guess by this we have concluded the H1 2024 performance, and we are opening the floor for any discussion or question. So any discussion, any question regarding the performance or any area? Since there are no any question from the audience, thank you very much for attending the session, and see you inshallah next time when we are closing 2024.
Thank you.
Thank you.
Thank you.